Currency markets. I want to bring in our next guest today. We have Alan Nuckman, the Chief Market Strategist at Agora Financial. It's been a couple weeks since you've been on the show, Alan. It seems like at least
Good morning,
a week.
guys.
Good morning. It's good to have you back. Does this surprise you with all the activity that we've seen this week that the dollar's held in this range, basically the same range that we've been in since mid-January? Not a lot of initiative-type price activity in the dollar as of recent.
That is interesting because markets are on the move and a volatility is opportunity. This is one of the best times as a trader that we've seen in a long time with so many markets moving around. But the dollar is stuck. The dollar's in a range, like you said, between 88 and 90 since mid-January. So we've got this pivot at 89. Now, would I look at this as a glass half full in the fact that it hasn't gone through that 90 level and we have not really made a bottom here. So the trend overall is in the dollar still down. But what you're seeing is some reaction out of markets that try and foretell what the dollar's doing. You saw crude oil, you just did a whole segment on it, and it looks like it wants to attack that 66 high. And if it does that, then the distance of that sell-off, we're looking at $75 in crude. So crude's up $2 this week, and gold's up $30 this week after making a bottom just around the 1300 level. So those markets are moving, even though the dollar's not going down to help it yet. So we'll have to wait and see if this dollar can decline and take out those old lows.
Yeah, Alan, it looks like, good morning. It looks like the dollar is softer again this morning. That's affecting, another tailwind for gold. But here's what I'm asking. When you look at the dollar and the overall thing, is this starting to get a level? We've had a lot of people on the show talking about the dollar, and we're starting to see a little tone change when it comes about a bearish dollar trade. A lot of people are starting to saying these sell-offs are for buying here and starting to buy the dips and cover shorts on this dollar. Is that what you're seeing, or do you still think that the dollar could go lower?
I still think the trend is intact. We've seen this before. We saw this last October, and it went down and made new lows. The overall trend of the dollar has been very much straight down, so I don't think it's over. Now, remember, we talked a couple weeks ago that we had that W formation that I was worried about the bottom getting put in. We have not seen any follow-through on that. So the price actions tell me right now that the dollar doesn't have that much power because it very easily could have had a little bit of a short squeeze and a spike, and it didn't do so. So sometimes it's equally important what didn't happen as what's happening, and the fact that we're just going sideways, we're not going higher, but we're not going lower either. So, we'll have to wait and see. But I think looking at the other markets, I'm getting some clues that I'm looking that the dollar could weaken here in the future. That's what those markets are telling us.
Yeah, Alan, we have to take a quick break here, but I'm sorry, Alan, we have to take a quick break here. Sorry about that, but Alan, stick around because I want your thoughts on some of those other major markets, the other foreign currencies that have been on the move this week. We're going to be right back after this short break with more Futures with Lichtenstein and Hinks right here on the TD Ameritrade Network.
If you're looking for an edge, consider education. TD Ameritrade's Education Center has practical knowledge you can use right away.
The foreign exchange, or Forex market, is the world's largest financial market. Advanced investors use the Forex market to speculate on changes in currency prices. Currencies trade in pairs, which means the value of one currency is always stated relative to another currency. Let's look at an example trade using the Euro-US dollar currency pair. Even though there are two currencies involved, the pair itself acts like a single entity, similar to a stock or commodity. Let's suppose that an investor thinks Europe's economy is going to grow faster than the United States, and as a result, she thinks the euro will strengthen against the US dollar. She can buy the Euro-US dollar pair to speculate on her assumption. If the pair rises, she'll make money. Conversely, if the pair falls, she'll experience a loss.
Learn the basics and beyond with TD Ameritrade's award-winning Education Center at tdameritrade.com.
I'm Oliver Rennick.
I'm Ben Lichtenstein.
I'm Victor Jones. I'm Kevin Hinks.
I'm showing you on the screen here right now the NASDAQ, the ES, the Dow, the Russell.
You can see the pop right there overnight.
This stock, best performing stock in the Dow. It's up 70%.
As an investor, you need to think about how this affects the overall business strategy.
People miss the boat in that they don't have a plan when they get in, and when the stock goes against them, they panic.
Think about the duration of whatever you are investing in.
We're going to look at the company profile on the mobile devices.
We can start to make it easier for our clients to work with us through modern technology, modern tools, and greater degree of investor education.
Yep.
and then that'll be a source of growth.
Welcome back, traders. We have Alan Nuckman rejoining us here this morning. Alan, we just got our durable goods orders number this morning coming in pretty hot, 3.1%. It's going to provide a little bit of support for the ES, the NASDAQ, the Dow, the Russell. They were already starting to trade a bit higher. Looks like the treasuries are starting to sell off a bit in reaction. What are your thoughts on this number?
Well, I think the macro market overshadows, this number after the action we saw yesterday. We had our breakdown in the market. Now, talking about the E-mini, we saw the S&P been trading in kind of a wedge pattern here in the last couple of months between 2,600 and 2,800, and that 2,700 was a pivot. When we went below that, we saw a good smack to the downside. Now, let's see if that holds over a weekly basis. But again, the action yesterday was somewhat destructive of the market. When you got to remember, we were only 2 Tuesdays ago 70 points away from the all-time highs in the S&P. So we had a healthy recovery, but we saw some unwind. So looking at this durable goods number, it's just a piece of the puzzle. Everybody this week was focused, obviously, on interest rates. And yes, we're going to raise rates. It was a 99% chance we were going to raise rates when we did, so it was a done deal. But if you look out in the future, you look at 80% chance in June, 60% chance in September, and then there's a 40% chance in December. So, there could be that elusive fourth rate hike still out there. There's close to a 50-50 chance. That's what I think the market's more focused on right now.
Alan, I'm going to give you a scenario, and you tell me if I should change my thinking. When I think of risk-off trading, right, I see buying bonds, buying VIX, buying gold, right? Should we add the Japanese yen to that risk-off? Because it appears like when the markets get risky, people go to the Japanese yen. Am I right? Should I be adding that to my risk-off trade?
Absolutely. I was taught as a little trader that the yen is a place of safety. And for a while, it stopped being that value area, but it's come back into play. And you can see that breakout in the yen. We talked about this a couple of weeks ago, that the yen was within a range and it was breaking out, and it's got some solid follow through. So you're seeing some strength there. What you're also seeing some strength, even though the dollar's not moving much, you're seeing some comeback in other currencies. You're seeing the Canadian dollar rally. Obviously, oil has an impact in metals and gold. That's helping them. They had pulled back a bit, but they had made a bottom, and they had rallied up to that 80 level in the Canadian. And if you look at some of these other currencies, look at the pound. The pound made a complete comeback, from the 120 level up to 143. So there's strength in other currencies around the world. Even though the dollar's not on the decline just yet, it may be a delayed reaction. That's what I'm looking for.
Yeah, Alan, you mentioned strength in the pound. You mentioned strength in the Canadian dollar. We're also seeing the Mexican peso, which seems to be holding its own. I'm curious if you think that's because they sort of dialed back some of that rhetoric as far as trade tariffs goes.
Well, I've told you what my rule is. I've got a 2-day rule. Anytime you see any complete nonsense come out of Washington, D.C., see where the markets are, not immediately. Don't look at the immediate reaction. That's a knee-jerk fear reaction. See where we are after 2 days. And in the past, we've seen the market stabilize and rebound. So let's see if the same thing can happen. Yesterday, to put in perspective, was only 2%. I don't think anybody here feels like it was only 2%. But if you look at it, the stock sell-off yesterday was 2%, very manageable. Yes, we're seeing some wild swings, but like I said at the beginning of the segment, this volatility is an opportunity. You've got markets on the move. We want markets to move so we can make money, and this is probably the best time as a trader because of electronic trading and platforms to be able to trade any market, anytime, any direction. There's unlimited opportunities, unlike when we were kids, Ben, when you had to stand in one pit, and if it wasn't happening that day in that pit, how did you make money? So now you can click on a screen and trade anything, anywhere, anytime.
Yeah, unlimited opportunity, Alan, but you have a limited amount of capital to take advantage of some of those, so you're going to have to pick your points there. Go ahead, Kevin.
That's a good point.
All right, so Alan, it's funny. I have the same rule about doing things, but mine from being a trader in a pit, mine was 2 minutes, not 2 days. So it was just a little different how we measure. So here's what so now let's talk about the tariffs. I just read through some of the AP release, and there was a lot of maybes and sort ofs, and we could do this and we might do this, but it really talks about negotiating, right? It's all about negotiating. Should our listeners ignore the noise of the news media and just look for the fact that really nothing has happened yet?
Right, nothing has changed, okay? The way these get rolled out, and we've seen this over and over again, it's a punch in the face, you stand up, you dust yourself off, and then you figure out, what you're going to do to resolve this fight. So, it seems to be a lot of talk, a lot of bluster, a lot of headlines, but when it actually comes down to the details, it's not that big a deal. Even the tariffs that were announced, on steel and aluminum, if you break it down, there's so many exemptions. There's a waiting period, there's a negotiation, and so forth. Then there may be quotas. It's all maybe, maybe, maybe. So the headline is boisterous, bellicose, but the reality is there's a lot of room for talk and negotiation. And look at the price action, because that's what I do. You look at something like soybeans. Soybeans haven't sold off, and that would be China's biggest biggest shot that they could shoot at us as far as putting tariffs or some sort of restrictions on our soybean exports. That could start a huge battle, but that has not happened. So let's look at what's not happening. But I want to get back to one thing, because I know we've talked about this in the past. I talked about a bottom in bonds, and we saw a short squeeze, the beginning of what I think could be a bigger short squeeze. Everybody was convinced we were going to 3%. That didn't happen. From a trader standpoint, the reward to risk was looking for a little bit of a pullback in yield, and that's what we've seen here. We had the 10-year down at 2.8 yesterday, and a big bounce in bond futures, and a big rally in the TLT that we talked about as a way to play that.
Yeah, big time, Alan. That's a great segue to my next question. I'm curious, we saw a new 2018 low in the 2-year and the 5-year this week, but the 10 and the bonds didn't take notice, didn't participate. You mentioned that rates are actually on the rise here right now, or I'm sorry, coming off as the bonds rally. What are your thoughts as we're seeing that 2-year into the new low, but the bonds, the more longer dated, not participating?
Yeah, I'm looking at the 10, and I'm old school. I used to dabble in the 30-year on the floor. So that, for me, was always the barometer of safety and flight to quality. And we saw some of that recently, which was interesting because we haven't had that in such a long time. So I don't know how much downside there is in yield, but I didn't think it was going to go straight up above 3 like everybody had expected. And everybody was on one side of the trade. So you look at some of the shorter years, like you said, the 2-year, that's obviously very sensitive to exactly what the Fed does. And they're forecasting 2019, 2020 a little bit. They had shifted up their target forecast. And I think that's why you're seeing that relationship change a bit. But the 10 and the 30 are based on supply and demand. And I've seen, it's interesting that we pushed above that 145 in the 30 level. Let's see if it can hold on a weekly basis. And some of the worst may be over in that bond market.
All right, Alan Nuckman from Agora Financial. Always a pleasure to have you on the show. We look forward to having you back in the near future.